People have been saying for ages that with Asian stocks, you should just hold on to your golden bowl and wait. Hold on. Waited so long that the gold on the bowl is starting to peel off. So the question is, can we finally use that golden bowl with Asian stocks? Today, I did my homework to find out. The interesting Asian stocks include India, Vietnam, Indonesia, and just a little bit of Thai and Chinese stocks on the side. I've done a ton of homework for this. If you appreciate all this effort, you can support me by scanning this QR code right here. Or if you really don't want to miss out on more great information like this that I've worked so hard to put together for you, just hit subscribe, like, share, or leave a helpful comment below. Thank you so much, everyone. And to kick off this video with an incredibly vibrant and high energy vibe, let me play a theme song that perfectly aligns with the exciting topic we are covering today, featuring the most talked about and hottest performing stock in all of Asia. That's the Baroda stock theme from India. I had the chance to interview the Kasikan Corn Thai Research Center, and here is a detailed breakdown of the highest performing and most lucrative stocks in Asia, and it is clear that those are specifically Indian stocks. Wow, they've climbed this high. So high. It's like reaching the Himalayas. Not yet, still not at the peak. Stocks have climbed this high, you know? But that doesn't mean we'll always get stuck at the top. But should we be careful? Yes, we should be careful. All right, let's look at the chart to see which stocks made the most profit, right? So India had the highest profits, right? Followed by Vietnam, Indonesia, and then Thailand. And for Thailand, at the end of the chart, it even dips down a little. And the lowest profit was from China. So why did stocks from India, Vietnam, and Indonesia make such high profits? It's because of their infrastructure, but most importantly, what really drives a strong economy is the population. Their population structure is solid. With a large population, there's a lot of domestic consumption. If we take a closer look at the countries with the very highest levels of domestic consumption in the world, it is the United States ranking at the top. The United States of America has domestic consumption that accounts for 67% of its GDP. The second highest is in Asia. It's not China, but rather India, where domestic consumption accounts for as much as 60% of GDP. That's because India now has the largest population in the world. It surpassed China quite a while ago. And what's important is that India's population is expected to keep growing even more. So moving on to the next topic, the key infrastructure that will drive the rapid economic growth of the three highlighted countries, India, Indonesia, and Vietnam, is that they all have a growing population structure. If you look at this graph from KS Research again, you'll see that while China does have a large population, the trend in its population growth is actually declining. Meanwhile, in India, where the economy is expanding, the population is on the rise, currently growing at 0.8%. Vietnam and Indonesia are the same way. You can see that their populations are on an upward trend. Meanwhile, in Thailand, where the economy is stagnant, this is important. The growth rate of our population is actually declining. And the next important point is that having a large population only matters if most of them are of working age, the age group that's actually generating income. Let's take a look at the population pyramid. Normally, when I do a simple economic analysis of each country, I look at the population pyramid right away. If a country has a nicely shaped pyramid with a solid base and most of the population still in the working age group, it means that this country's economy has growth potential and the possibility to expand. So let's look at each country one by one. India, you can see that their pyramid has a solid base. Most people are in their mid-20s and growing. Many are in the workforce. Vietnam. Most of the population is still in their 30s, early to mid-30s. As for Indonesia, Indonesia have a lot of new births. So a large portion of their population is in their mid to late teens. Yeah, teenagers. So that's why Indonesia has a lot of growth potential. As for Thailand, you see, this is the kind of pyramid shape that I would call, well, not so great. Financially speaking, the base is narrow, and it bulges in the middle. That means most of Thailand's population is aged 40 and up, all the way to around 60. So we've officially become an aging society. That's part of the reason, you know? A key factor that makes Thailand's economy, slows down as well. If anyone wants to check out other countries just for fun, you can go to populationpyramid.net and play around with it. And like I mentioned, right, the population is a key factor that makes the economy strong. Like I've told you before, if a country's economy collapses, part of the reason is because the population gets poorer, the population is damaged, the population is vulnerable. Leading Asian nations have growing populations and strong demographic structures, driving significant GDP growth. Starting with India, its GDP rose 6.7%. Signed, Indonesia. Vietnam's GDP grew by 5.5%. Vietnam's GDP grew by 6.9%, while Thailand's GDP, DPTO means light, 2 points, 3%. Maybe it's because we grew up before them, so we think, wow, we're bigger, but our growth is just a little bit higher. Let's take a short break. Another thing that supports India's strong growth is the per capita income. Because when we look at, you can't just look at GDP. GDP is the overall income of the whole country, right? If you want to know whether people's quality of life is improving, you have to look at it per person. That is, per capita income. The term for this is GDP per capita. And India is a country where the growth of GDP per capita, or per person income, has also increased. If you look at this graph, let's set China aside for now, it's just not a fair comparison. For India, you can see that the per capita income, that green bar, it's true that it's the shortest one. And right now, Thailand has the highest GDP per capita. The green bar is the tallest. But what really matters is the growth rate of growth in per capita income. The country with the highest growth rate in per capita income is actually India at 9.4%. That means people there have a chance to get richer. Next in line for GDP per capita growth is Indonesia and then Vietnam. Next, if you want to invest in stocks or look at the stock market, you have to see where the money's flowing. Wherever the money flows, the more money that comes in, the more expensive the stocks can get. And we'll have a chance to make a profit in that stock market. The money that flows in, personally, I like to look at FDI, or foreign direct investment, which is direct investment from abroad into that country. And if you look at which country has the most FDI, if you look at this graph, China is already a major economy, right? So of course they have the most FDI. But what's more important is the growth of FDI, the growth of the money that's going to increase in the country. FDI in China only grew by 5%. Meanwhile, in India, FDI grew by 32%. In Vietnam, FDI grew by 43%. And in Indonesia, growing by 17%. Thailand's economy is currently experiencing a decline of 2%. So let's take a closer look at the various underlying factors supporting and sustaining it. Let's look at the risk factors of each country, starting with India. Like I mentioned, the stocks have already gone up, right? And when stocks are high like this, there's always a chance you'll get stuck at the top. But let's see what factors could support them to keep going. According to data from KS Research, it seems like originally the first point is that the Indian government has allocated a budget for building the country's infrastructure this year, reaching as high as $130 billion. And that's just this year's budget. But if we look at the total budget, the total is $534 billion, which accounts for as much as 15% of India's GDP. This sum of money can really drive the economy, helping it to grow and thrive from 2024 through 2026. And it will also be a part that helps push GDP up to 8%. Besides that, India also has a huge amount of domestic capital flow, meaning there's a massive increase in domestic investment thanks to a program called the Systematic Investment Plan, or SIP, which is a fund that allows working people in India to buy in order to get tax deductions. It looks similar to a retirement fund or a provident fund in our country. This fund, you see, is able to raise money from people within the country who can invest in the fund up to 90 billion baht per month. This helps support the stock market's growth. But India does have its risks, and this is a vulnerable point is that because the unemployment rate is quite high, extremely high actually. So new graduates can't find jobs. This is something we need to be cautious about. And another thing we should keep an eye on is If we look at history for comparison, for example, if India manages to grow a lot, and we want to know, hey, just how far can India really grow? Even if other countries try to intervene or cut them off, it's pretty simple to see. India's GDP today is growing a lot, right? If it keeps growing from here on out, give it another 10 years, and if it keeps growing steadily, when will it get close to the United States? That's when you really have to be careful about the US stepping in, because, for example, Japan faced this during the Plaza Accord. Or like China, which got hit by the trade war that started in 2008, amen. So yeah, you could say Indian stocks have risen this high. Are there supporting factors? Sure, but you must be careful. Buy with your bags packed, ready to go. Otherwise, you'll just end up stuck holding the bag. That could happen too. Next, Indonesia. Well, their stock also look promising. The trend is positive, with a favorable population structure and a large working age population. In Indonesia, factors keeping money local include moving the capital to Nusantara. Heavy government spending there ensures funds stay within the country. This will help the economy to thrive for another 20 years or so. Another thing is that Indonesia has a policy called the downstream policy, which means they prohibit the export of raw minerals like nickel or other raw minerals used to make EV batteries. This makes Indonesia a highly appealing and strategic destination for the industry of EVs. So if anyone is thinking about investing in the EV industry in Indonesia, Indonesia is definitely interesting. But I have to say, this is also going to become a competitor in establishing a significant and strategic EV hub for Thailand. As for Vietnam, it is widely recognized that Vietnam is growing just like Thailand did 10 years ago, and it looks like it will keep growing really well. The main factors supporting the growth of Vietnam right now are Vietnam is currently a frontier market, or what you might call an emerging market. They're working on upgrading to become an emerging market, which is the same tier as Thailand. If they can move up from a frontier market to an emerging market, it will bring a huge influx of capital into the Vietnamese market, just like what happened in Thailand, especially capital from foreign funds, which will be able to invest much more. Plus, Vietnam is a market with a large pool of low-cost labor, making it very attractive to big global companies. However, the risks for Vietnam still revolve around its structural issues, just like before. Especially right now, it's the electricity system in the northern part of Vietnam. Leading companies, the big corporations that have set up factories in Vietnam, have also issued warnings about this, saying that if Vietnam can't manage and handle the electricity supply properly, if they can't stabilize the electricity infrastructure, there might be a relocation out of Vietnam. And another important thing for Vietnam to watch out for is the real estate industry. Because the real estate sector, Vietnam's real estate sector, by the end of this year, will have debt maturing worth as much as 2.3 billion US dollars. This is something we really need to keep a close eye on. We need to watch carefully to see if there will be a default or a debt crisis emerging in Vietnam's real estate industry, or not. Because if it does happen, it could have a significant impact on the stock market. That wraps up our homework on Asian stocks. Next time, we'll look for tax-saving funds. Since it's tax deduction season again, it's that time of year again. For anyone watching this video, if you feel like got any more info you'd like to share, go ahead and share it. Share your thoughts, comment below, and most importantly, no matter what you buy or invest in, don't do it just because I said so or friends told you. Research carefully. Investing is risky, so study before investing.